Hello, everyone. Good morning. It's Monday morning, January 18th, Martin Luther King Day, holiday on the market. And this is George DeSantis with the Look at the Market, which I do approximately every weekend. And it's for the week ending Friday, January 15th, 2021. Before we begin to look at charts, etc., and discuss the market, let me bring up, as usual, the disclaimer that invites you to take a look at it and be sure you understand that this is not an attempt to give any advice to any particular person, since I am not a professional investment advisor. I do this for my own reasons, my own purposes, and I share it as a video on YouTube. Anyone can take a look at it and make of it what they will. Just enjoy. um, we'll begin to take a look at the market by looking at some charts on TC2000. So let's begin to do that. So let's begin with a weekly chart of the S&P 500 as we usually do. As we look at the weekly chart, we can see that the 4 exponential moving average, or what we refer to as EMA, the 4 EMA, is above the 9 EMA, and that is above the 30 weighted moving average. So you have these moving averages above each other from the lower period to the higher periods, right? And and in most cases, when we have that, we will simply conclude that we have an uptrend, and that's been in place since the 4 crossed above the 9 back here. It hasn't really crossed below it. Okay, so the other thing to look at is that parabolic, this white dot here, parabolic is still below the most recent bar. So the parabolic is called a parabolic stop and reverse, so that if you have an uptrend and the dot goes above the next bar, you say that the trend is now reversed. It's stop and reversed, a downtrend. But so far it hasn't. It hasn't in this area here. We still have a nice uptrend going to parabolic. Now, last week I mentioned a couple of things on the chart occurred to me, and one of those was that last week's bar came pretty close to hitting that 2 standard deviation line, that Bollinger Band of 2 standard deviations, that dotted green line, okay? So once we get to 2 standard deviations, the probability of prices going higher than that becomes very low. It is diminished. The probability is diminished. So we can expect, and I said that, we can expect a bit of a pullback. But I said that I don't think it's going to be a treacherous one. I don't think it'll be a significant one. And we'll see. That is still to be determined. So what did we have last week? We had a bearish bar. However, if you look closely, and I'll open the chart up, you'll see that the entire body of this bar, of this candlestick here, can fit perfectly into this body here. This is what the Japanese candlestick system refers to as a bullish harami, or sometimes referred to as a pregnant woman. This being the fetus and this being the body. This is the baby, that's the body. So you have a pregnant woman or bullish harami, and obviously, as the term suggests, it's bullish. We'll see if that plays out or how the market plays that out next week. Now, if we go down to, the other thing is that we did have a hammer. Sorry, we had a hanging man. It looks like a hammer, but at the top of a trend like this, it's a hanging man, because the shadow here is approximately twice the size of this body here. Okay, this main body. So we had a hanging man, which is bearish. Again, we said, I said, look, we might get a pullback because we came close to the 2 standard deviation line. We had a hanging man, but in opposition to that, we had the moving averages above each other and the parabolic below the most recent bar. So there was a bit of a tug of war. If you ask what I think right here, I think we go higher. I think this is a weekly chart that's telling us the trend is still up. Let's go down to the directional movement index, ADX, okay? average directional index, movement index. You can see that this green line is still above the red line. The histogram is still trending up from above 20, and that indicates that we have an uptrend. Now, we do have one caveat here, one yellow flag, and that is this bearish divergence of MACD that I've been pointing out now for weeks. Now, these things don't always pan out. They don't always lead to a big downtrend, but they should not be ignored, because you ignore it to your own detriment. They sometimes, or more often than not, they lead to a downtrend, but we don't know when that downtrend will occur. So keep an eye on it. This MACD histogram is used for sell signals, and we don't have a sell signal, because if we did, as we did here, we would have a red bar, a red histogram bar, but we don't here. So I think the preponderance of evidence leans toward a bullish interpretation of this chart, and we should go higher. This is the weekly chart, and as Alex Elder, my friend, says, we should take our strategic decisions from the weekly chart and our tactical decisions on the daily chart. So let's turn to the daily chart. All right, so here's a daily chart of the S&P 500, and we'll start at the top, as we always do. We look at the moving averages first, as I say, we usually do. So the 4 EMA is now just above the 9, and but it hasn't quite crossed below it yet. The 9 is here, the 30 weighted moving average is here. Now, last week I pointed out that we do have this hanging man. You could see that the body of this, you could see that the shadow here is more than 2 times the height of this body. So that's called a bearish hanging man. And I mentioned that because of that, and because we've come above the 2 standard deviation line, we're between 2 and 3 standard deviations, we are likely to consolidate, and that's what we got. We got a pullback, a minor pullback, some consolidation of this move, right? It's typical consolidation of this move, and then on Friday we had this more bearish bar. But if we focus on this bar, first of all, we could see that it closed. The market opened here on Friday and closed here. So it closed between the 9 and the 30, okay? And this is what my friend Rick Monteith at Teach Future Visions points out is a very good buy signal, this buy zone here, okay? Notice that when we dropped between there, we went up higher. When we dropped between there again, we went higher. So this area is a good buy zone, okay, between the 9 and the 30. To be determined. We'll see if that turns out to be the case again. But I'm just pointing out what I'm seeing here. I'm seeing that we are now closing again, as we did here and here and here, in the buy zone. We do have parabolic above the most recent bar, and on the daily chart, we tend to get more whipsaws from parabolic. You could see that, you know, it whipsaws a bit. We get whipsawed a bit by the parabolic here. So we do have some conflicting evidence here, but I think that this is a pretty bullish sign here. The fact that we rejected this price right at the 30 weighted moving average and closed higher on Friday, and we closed within the 9 and the 30, this buy zone here. So let's move on. On the average directional movement index, you could see that this green line is still above the red line, okay, the minus line. This DI plus and DI minus. And that has been the case since back here, since back in November, when it turned positive again, right here on the daily chart. Okay, so directional movement index is saying, you know, we still have an uptrend. It's a bullish indication. Now, when we go down to MACD, MACD is giving us mixed signals here. We do have, yeah, we do have a what we saw on the weekly chart as a bearish divergence of MACD, and we now have a sell signal here, especially on the 1939.9. But notice that we've had sell signals here, and it didn't materialize into any significant drop. So, we can't always depend on one indicator. So we have a bit of a tug of war going on here. I'm leaning toward the bullish side. I still have stocks. I am not selling out. I'm waiting for more evidence that this market is looking to go low. Let's take a look at the chart that I learned from Jake Bernstein, who is an old timer. And as Jake puts it, he doesn't rely on opinion. Everything that he proposes is really supported by computer analysis. So what do we have on our weekly chart of the S&P 500? We have a bullish chart according to Jake, because we don't have two complete bars below the moving average of the lows. We don't have two complete bars here, which would be a setup for a downtrend, and we don't have the accumulation distribution line below its moving average. So we still don't have a sell signal on the weekly chart from Jake. Let's take a look at the daily chart. On the daily chart, here's what we have. We have prices now at the low of this channel, this moving average channel as it's called by Jake, and this equals a conservative buy signal. So you see, when the market was trending up, if you didn't buy on these two bars here above the moving average of the highs, this was your first conservative buy. It went up. This was your next conservative buy. It went up. Next conservative buy, another one, and now we have another one. So take it for what you will. Jake Bernstein's chart is also saying we have an uptrend and there's no reason to sell this market. Let's take a look at the Shaken Analytics charts to see, if there's some individual stocks that we might be interested in. Again, I'm not attempting to give any particular person investment advice. That is your decision, but I'm just showing you what I see on the charts. These are Shaken Analytic charts, and most of these stocks, for example, Alcoa, which was oversold here, many of these stocks are now overbought. So if you look in this area here of the oversold, overbought indicator, you'll see that many of these stocks became overbought. Check it out. Here's another one. Well, Ally, I still own this one. It's not overbought yet. Okay, Ally Financial. But Best Buy is overbought. BioRadio Labs is overbought, pretty much. MCK is overbought, McKesson. But if we go down to TAN, you can see that TAN is now oversold. This is one of those ETFs, and it's also sitting at a 21-day average. Now, I don't own this right now, but this would be a good place to take a look at TAN again. Okay, so take a look at TAN. Let's take a look at a few more on my major watch list. This is Target. You can see it's oversold, overbought now. So with that in mind, with all of these overbought conditions on many of these stocks that are on my major watch list, it's quite possible we might see a little further weakness in the market because so many of these stocks are overbought. But I don't think we are looking at a major pullback. Hope I'm not underestimating the bears here. Look at Accenture. Accenture is becoming oversold, but I don't like the money flow here. Now let's go down to the ARCs. Let's look at ADS, Alliance Data. I owned this one. I don't think I own it now, but it became overbought, and now it's looking to become oversold here. So we want to keep that radar on that, right? Here's one, AMRS. That is parabolic, and I don't like to buy stocks when they are so parabolic. Not here anyway. Would have, if I could have, should have, would have, right here, but not here. It's too parabolic. But it's now almost oversold in this region, and the personality changed from negative to positive. Money flow is strong. So if this thing pulls back at all, especially if it pulls back to this area, the 21-day average, it could be an interesting one to look at. Now I want to show you what I'm seeing on the ARKs. The ARKs are becoming overbought, but I still own these three: ARKG, ARKK, and ARKW, and you could see they're all in the same overbought position. Okay, now here is one that is oversold, I think. DDS, this is Dillard's, and it's oversold. And money flow is weaker, but not bad. And relative strength has ticked up and has become bullish rather than neutral. So that's one to put on our radar, on our list. Here's one that's oversold. Intuit. It's that software package that is used, for taxes, and so that's now oversold, and it's a bullish stock. Here's International Paper. Now that's overbought rather. IPO, I think I still own it, but it's becoming overbought. Okay, but it's still something that I want to keep an eye on. I want to hang on to it for a while. Synopsys is an interesting one. It's now in this oversold area, and I used to own it for a while. I made some good money with it, but I'm looking to buy it again. I think it's one to keep an eye on. Money flow looks good, relative strength looks good, and it's bullish. This ETF was oversold and is now ticking up again. So it's one to put on your watch list and maybe start accumulating. It's bullish, relative strength is good. Money flow dropped quite a bit, but it's still in this neutral territory here. Okay, folks, I think that's all for today. I will try to do this again next week, and have a great week. Okay, have a great week.